Hey guys, and welcome to the Working Money Channel. So U.S. lawmakers proposed to cut SEC Chair Gary Gensler's salary to $1. Boy, wouldn't that be sweet? The Financial Services and General Government Bill proposes to drastically cut funding to the SEC and other government agencies, guys. This was reported by Cointelegraph here. A United States lawmaker wants to strip the SEC Chair Gary Gensler of his salary by paying him just $1 per year. In a proposed amendment to the Financial Services and General Government, Representative Tim Burchett suggested that Gensler's salary should be brought down to $1 as part of a wider proposal to defund the regulator. First introduced on July 13th of this year. That date sounds familiar. The FSGG bill is a wide-ranging piece of legislation that aims to significantly reduce government spending across the board. And you guys can see down here the bill is listed here, but looks like there's some kind of an error here. Basically, though, salary should be reduced to just $1. It's estimated that Gensler earns north of $300,000 per year for his duties as head of the SEC. Burchett wasn't the only lawmaker taking aim at the SEC, with the overall bill aimed at drastically cutting funding to a number of government agencies. While introducing the bill to the House Rules Committee on November the 6th, Representative Steve Womack outlined that the SEC, among other agencies, has fallen prey to regulatory overreach and was becoming an undue financial burden on the government. So Congress is looking like they are not messing around, especially when it comes to the SEC and crypto regulations. We know, Congress feels like they have to get these rules in place now because the SEC is just not doing their job, and because of the corruption. I mean, the whole, we haven't even addressed ETHgate and what's going on there, but I'm sure, we're going to get even more information as Stephen Narioff reveals more. But, in terms of how this is looking, even just on the global stage, the United States is not looking as favorable to, some other countries that are already worlds ahead when it comes to crypto regulation. So, when you start a business, a blockchain, DLT, crypto business, whatever it is, you're probably not going to want to start it in the United States. And this is even what big players in the industry are saying. Brad Garlinghouse has gone on the record and said that if you're starting a company now that has to do with cryptocurrency, don't start it in the U.S. Go somewhere that is regulated, like Singapore, Japan, the Middle East, wherever, somewhere else. So if passed, the bill would fire Gensler and redistribute the power of the agency between the SEC's chairs and commissioners. And that, I think, gives us a little bit more leeway there. The power wouldn't just be concentrated at the top. It would also create an executive director position and add a sixth commissioner to the agency to prevent any one political party from holding a majority sway. So there you go, guys. Gary Gensler maybe will have his salary cut. Fred Rispoli even commenting on this: I must concede at least Payday J, aka Coward Clay, I love these hashtags, by the way, when it was his SEC, went buck wild in this regard, letting SEC employees have near limitless ability to buy, sell, and trade crypto while working on crypto cases. So that was not good. The SEC is having trouble now hiring crypto experts. This is coming from Jeff Roberts, because a rule they must sell all of their crypto. And to be honest, anybody who is a crypto expert is probably involved in purchasing cryptocurrency or has some in their portfolio. So why would they want to, work for a company or an agency, the SEC, that is not allowing them to do what their expertise is? Would make more sense to allow staff to hold modest amounts. This would make them better at their job, for example. And so this just links to the SEC Gov files here link. The prohibition, according to the SEC officials, has been detrimental to recruiting, as candidates are often unwilling to divest their crypto assets to work for the SEC. No duh. Fred Rispoli just responding down here, the SEC is an embarrassment. Only thing saving it now is that there is a very strong competition among many .gov agencies for biggest embarrassment. This is the sentiment surrounding crypto regulation in the U.S. Congress cutting, if they could get around to doing something and, to make that a concrete decision, I think we would have a better chance at being a leader on the crypto stage. Nevertheless, wanted to thank Fred Rispoli and Jeff Roberts here just for posting that. The good news for crypto traders, guys, we are still in a very bullish market. This is the total market cap here on the weekly. And, after a year of a bear market in 2022, we have seen renewed interest for cryptocurrency in 2023. And I know it hasn't been as exciting as, let's say the first part of the year. Again, this is the chart on the weekly. We've seen some ups and downs, and now we're moving up. So we are in a fairly positive spot when it comes to, the crypto market and, the beginning of something that is going to be very, very exciting for many of us. And if you guys have not finished accumulating your crypto when, you should have been, and guys, I'm guilty of that too. I was accumulating in and around here. I still do think there are opportunities. And so, I've got my thumb on the pulse of the market, and I'm going to be pulling the trigger probably on some new cryptocurrencies for the $10,000 plus portfolio. Cryptocurrencies that you may have not even heard of for my patrons, patreon.com/workingmoneychannel. I'm sharing all my trades with my patrons, letting all my Patreon subscribers know which coins I'm getting into, what percentage of my portfolio too. That's a big thing. So, I'm putting certain sums of money into some coins and maybe a little more in other coins, just depending. So we're going to get into all those metrics. These are not coins like XRP or Bitcoin or, the main coins that I talk about on this channel. These are other cryptocurrencies. Diversifying, this is going to be key for maximizing profit in this coming bull run. So for only $5 a month, you guys can follow me, and I've kept it purposely affordable so that you guys can follow me throughout the bull run. So we can look at these trades, talk about them. I'm going to be sharing my exit targets coming soon, and I'm also thinking about doing a live stream relatively recently. I know some of you guys have been wondering about that, a Q&A session, because I know you guys have a lot of questions. So I've already been getting a lot of questions from my patrons. But yeah, a Q&A session, live stream, all that happening at patreon.com/workingmoneychannel. Want to keep moving, guys, because there's still a lot to cover today. Subjective Views posting this in a recent interview. Ripple partner Finastra's Wasim Khoury, he's EVP of Treasury and Capital Markets. He stated, if you sum up the balance sheet of our 580 plus clients, they actually sum up to half the world's GDP. And guys, Finastra, a Ripple partner, listen to this.
At Finastra, just to think of it, we are a major player in this industry. And if you sum up the balance sheet of our 580 plus clients, they actually sum up to almost half of the world's GDP. So we are very abundant and very pleasant with our customers. So that allows us to really and put an obligation on us to utilize all of these technologies in order to help our clients through their modernization and cloud journey.
Of course, innovation really is at the core of this, isn't it? And you've touched on that already, but I'm interested to hear some examples of how you're driving innovation as well.
Yeah, that's excellent. Let me pick on a couple of examples. The main two is, number one, developing our partner ecosystem, and the second one, utilizing latest technologies, and now Gen AI. I am personally extremely excited about Gen AI. But let me start to talk about the partner and ecosystem. Like I was mentioning, nobody can cannibalize innovation, and I want to put the power of innovation with our clients. The only way to do that is to rethink of who are the competition. Are they really competition? Are they a collaborative team that we can work together with the sole purpose of providing the best of breed solution to our clients? So at Finastra, and especially in the Treasury and Capital Markets business unit, our partner ecosystem is our biggest investment. And we use our partners in different areas. So some of the partners we use are for local implementation partners that help us, especially when to adhere to local requirements, or risk regularity requirements. This is one type of partners that we heavily work with. Another part of partners is actually, in my point of view, one of the most advanced partnership that we have done, is because we have built our platform based on open APIs. And we are attracting now fintechs in order to come to our platform. Our platform is the platform for innovation. It's called fusionfabric.cloud. Utilizing our REST APIs, our clients can utilize these fintechs using our marketplace almost immediately, without the worry of integration, without the worry of upgrade. It is always evergreening. The best way to describe it is like when you have an app on your iOS, even if you upgrade your iPhone, the apps continue working. So we have created a marketplace with apps that are coming from fintechs in order to complement our solution, in order to give our clients all the tools that they need.
So a couple of huge points here, just at the end, as you guys heard, integrating tools, allowing, fintechs, partnering with fintechs essentially so that they can allow their clients to integrate seamlessly. Of course, we know Finastra, again, one of Ripple's bigger partners. And at the beginning here, he was talking about the balance sheet of 580 plus clients actually sums up to half of the world's GDP. Think of that for a second, guys, the kind of money that we're seeing there. What is the world's GDP? And as you guys can see here, as of 2021, so these numbers are probably higher, $96.51 trillion. So even if we say around $50 trillion, this is how much money Finastra has on their balance sheets right now between all of their 580 plus clients. So a lot of money moving there, guys, using RippleNet. A huge update from Subjective Views. Wanted to thank Subjective Views for pointing that out. Crypto Eddie also mentioning this, guys, more Ripple coverage in the MENA region, of course, because of swell. We're probably going to see a lot more of this. An Arabic daily covers RippleNet with a quote from Tariq El-Ajil, the digital energy development lead for the Kuwait Financial House Bank. And I took the liberty to translate this. This is in Arabic here. But if you put it in a Google Translator, you guys can translate this doc yourself. And they do mention Ripple a couple of times down here, exploring new partnerships. And Al-Ajil explained that KFH, so again with Kuwait Financial Bank, they cooperate with international companies with the aim at offering unique and highly efficient services, pointing to the cooperation with Ripple specifically, and using the RippleNet network. They mentioned down here the service of instant cross-border money transfers using the RippleNet network, stressing the continued collaboration of these new partnerships. So, I think we're probably going to see a lot more of this moving forward in the Middle East. Another quote acknowledged by XR Pioneer Pro down here, saying Ripple's wave is truly impacting shores worldwide. Trust swell in Dubai to ride that wave even higher. Tariq El-Ajil seems to be keenly surfing it as well. So boom, Middle Eastern RippleNet utility clocking in here. Wanted to thank Sento Sumo Saba for posting that. And speaking of Kuwait, this is an old one from 2019. While acknowledging this partnership, the MD of the MENA region and Ripple, Navin Gupta, we're talking about using RippleNet here. And you guys can see, here's a demo. National Bank of Kuwait actually using a RippleNet product in this short 30-second demo. Listen to this.
Ripple regionals here in Dubai. Some of our customers are doing exactly that.
And we embedded the payments through our channels, which is mobile banking, our internet banking, and our branches. So this is our normal mobile app. The moment I continue, it's actually started now going to Ripple blockchain. Now, me as a customer, either I decline or accept, so I'm gonna accept the payment. Depends on the network speed, but we have done. Wow.
At that time, Navin Gupta said, we look forward to supporting APK's ongoing effort to enhance its digital banking services by providing our innovative blockchain solutions for speedy cross-border payments. And there you guys go. I mean, Kuwait has already been Ripple enabled for quite a while now. So, considering we're seeing more and more positive comments with regards to RippleNet in the region. And then we've got the Dubai Swell event, which is happening right now. All positive news here. Wanted to thank XRP Drops for posting that. So some countries obviously further ahead than others. In yesterday's video, I was talking a little bit about the Cynthia Lummis story about, wanting to kind of get a jump start on this crypto clarity and how they're going to, she was talking about the crypto, funding terrorism and stuff like that, but also kind of focusing on stablecoins. Stablecoins play a more important role in this, guys, than I think you realize in some cases. The Bank of England has outlined a regulatory framework for stablecoins to be used as a legitimate payment method in England. So using stablecoins to pay, not just using a stablecoin to safeguard your crypto earnings. This one courtesy of Michael Branch here. So this is what England is doing particularly. Embracing the future of finance with cautious optimism, the Bank of England has unveiled a regulatory blueprint for the stablecoin sector, a significant stride that will usher these digital assets into England's payment ecosystem. This move is not just about keeping pace with innovation. It's a nuanced recognition that the landscape of money and payments in England is in the throes of a technical revolution. So because stablecoins are now being so widely utilized, and I'm going to get to a clip in a second about how people are actually using stablecoins for payments, I'm seeing countries like England realizing this and realizing they have to kind of make regulation around it. And I'm sure the same is happening in the US. By anchoring stablecoins to the sterling, the bank ensures they remain grounded in England's economy, avoiding the wild price swings seen in other cryptocurrencies. This regulatory approach is not just about ensuring stability, but it's also about fostering an environment where innovation and payments evolve hand in hand, propelling England towards a future where transactions are not just safe, but also swift and smart. The BOE's comprehensive oversight extends across the entire payment chain. In this nascent realm where stablecoins could be a mainstream payment method, the central bank insists on full backing by deposits with no interest to be earned, ensuring these digital assets hold their ground against traditional fiat. So they want to safeguard stablecoins and have them being used in a real-world setting. Of course, there's more to this story here. I will link this in the description if you guys are interested, but wanted to thank Michael for posting that. The other thing I wanted to show you was this, guys, from Megan here on Twitter, stablecoins versus direct dollar withdrawals. And this is the reason why, or at least part of the reason why, stablecoins are becoming so important. Listen to this.
Moving away from, regular U.S. direct withdrawals, do you see stablecoins playing a bigger role in this ecosystem? As there's a reckoning between banking and crypto, Stuti?
Sure. So traditionally stablecoins are seen as base pairs for trading, et cetera, right? But one very interesting use case that is on the rise is stablecoins being used in emerging economies. And in this use case, you can see stablecoins as not just as digital dollars, but as dollar diplomacy. So in the US, we can take the stability of the US dollar kind of for granted. But let's say you go to Turkey or Latin America, that is just no longer the case. And in jurisdictions like those, stablecoins are giving average citizens access to a better alternative, right? That is often pegged to the US dollar. So, I saw one interesting statistic that in Turkey, Tether, which is a leading stablecoin, has 20% of volume on BTC Turk, which is one of the leading digital asset currency exchanges in Turkey. And that is opposed to 1% of the volume on Binance. So this is a signal of strong Turkish demand for stablecoins, given that lira, their inherent currency, is unstable these days. So what I'm seeing is that stablecoins are actually creating rails to easily export US dollars and, in my eyes, also export human welfare to these geographies.
Also, Raj mentioned payments, international payments and remittances. I think the entrance of more traditional fintech companies like a PayPal launching their PayPal USD, it shows the long-term view of this, being a much larger use case than just sort of in the crypto trading markets. I think you'll see more entrants into the space like that are, neobanks or fintech forward companies, and they see the real opportunity beyond just sort of like trading.
So that's big, guys. Going back to this story here from the Bank of England, they're realizing stablecoins need to be regulated because they're going to be used for payments. And as you guys can see, countries like Turkey, as she mentioned in this example here, are already using US-denominated stablecoins because their currencies are so hyperinflated. So I think, in a lot of ways, we could see a lot more of this moving forward, just depending on, how the economy develops, which we're assuming is not going to get any better. It's just going to get worse based on the Great Reset predictions. And so was it any surprise that back in 2019, Yoshitaka Kitao said this in an interview? And are we still on track for this? I've had this article in my back pocket for more than 4 years. This coming from Sento Sumo Saba here on Twitter. SBI CEO representing the largest outside shareholder of Ripple was interviewed in February of 2019. He stated he thought XRP would become the #1 crypto asset among all, and they would be moving towards that goal. With the newfound legal clarity, this goal is more possible than ever. Note, yes, SBI does utilize the digital asset XRP in a variety of ways, including as a bridge currency. They also embrace ERC20 tokens with their R3 Japan joint venture. But what stands out to me is that SBI mines Bitcoin, up to 3% of all Bitcoin globally. So this was a powerful statement. So looking at all the other things that SBI does, they state, I think that XRP will probably become the #1 crypto asset among virtual currencies. We are starting to move towards that goal. So I looked at this and I thought to myself, okay, it's from 2019, moving towards this goal, guys. I just wanted to bring you some older articles from SBI, just kind of showing you how they are actually doing this. SBI defends Ripple, December 2020, right when we had the Ripple lawsuit, right? They had this coverage. Japanese brokerage giant SBI has come out to defend XRP after the SEC charged the cryptocurrency's founding firm Ripple for conducting unregistered security offerings. In a statement, SBI cites this person here, a fellow of the Nomura Research Institute, Institute, who underlined that XRP under Japanese law is considered a cryptocurrency asset. Cryptocurrencies like Bitcoin have been recognized as legal tender for payments in the country since 2016. So they stand behind XRP and have been since, even since the time that Ripple got sued. You move forward to January 2021. Ripple owns a third of SBI's MoneyTap blockchain payment platform. So you can see even a month later, they are still making deals together. In October, it was revealed that Ripple would invest in MoneyTap, the Japanese payments network owned by SBI, SMBC, and another 37 mainly regional banks. Today, SBI confirmed the investment is complete and that Ripple owns 33%, the largest shareholder after SBI. So partnering up on some of these bigger platforms, some of these bigger deals. Also in March of 2021, Japanese financial giant SBI to use XRP extensively with R3. We know since then R3 has kind of stepped away from XRP, but even back then, they said we have already begun discussions to create a project to use XRP for R3. By using R3, XRP is used more extensively. This coming from the same guy who commented on this back in 2019. And then in, July 2021, Ripple launches on-demand liquidity with SBI Remit to accelerate and grow cross-border payments from Japan. So guys, here, more solutions using on-demand liquidity, servicing implementation in Japan. The collaboration with SBI Remit, the largest money transfer provider in Japan, is one of the leading mobile wallet services in the Philippines. So they were expanding out to new corridors. In this case, they're talking about the Philippines here, and I will leave all these in the description of the video if you care to read further. And then we have June 2023, every bank in Japan will use Ripple's XRP by 2025, says the SBI CEO. So, he's not joking here, saying XRP is on track to make these huge moves even as far back as 2019. Then we have finally September 2023, only a couple of months ago, SBI expands Ripple remittance tech to banks in Vietnam, Indonesia, and the Philippines. So continuing to stand by XRP, stand by Ripple, the company. These guys have been partnered with Ripple for a while, even continuing to expand into corridors in that region of the world. So, just going through, the last few years here, demonstrating, putting his money where his mouth is, XRP will become the number one crypto asset among virtual currencies from Yoshitaka Kitao, and it does look as if they are still on track to do so. Which finally gets me to this, guys, because, we keep seeing these. Is something happening in the background where we are going to eventually see a high XRP price? Because people seem to think it's only them that see the glitches. Well, guys, here's another video of another glitch. 52,738,736 euro per XRP? You got to be kidding me. Just going to scroll through this video slowly. You guys can see it is changing there too. So why are we seeing these glitches on these exchanges? This one courtesy of the ISO GOAT. Is it because we're getting closer to a reality where XRP will be utilized, as Yoshitaka Kitao even mentioned, 2025, once we're full swing in that bull run, once we do have the liquidity? I mean, this would be the optimal time to unleash XRP's utility. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.